Well, hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter for June 8th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And the market, well, last week we saw the market bounce off the S&P's 50-day moving average. Now, this week, the S&P spent the whole week successfully attacking the 20-day moving average, which is above the 50-day moving average, and also going to new highs. Now, this week, the Fed meets as an overbought market is showing a slightly positive intermediate-term indicator, but boy, oh boy, Wednesday will tell us all after Jay Powell talks to the press on Wednesday afternoon, right around 2:30. So it's going to be a very interesting week. And our weekly stock analysis video, Trane Technologies. I mean, who ever heard of Trane Technologies? It's the old Ingersoll Rand, and it has changed its spots. It graces the Home Builders ETF, even though it's a machinery company, and it's up over 30% this year alone, almost tripling the S&P 500. And our ETF video, well, our favorite ETF top stock portfolio is made up of stocks from the QQQs, which is the NASDAQ 100. Now, this 11-stock portfolio is up 27%, with NVIDIA leading the way. Don't forget, this exact portfolio was up 97.9% in 2023. The same portfolio, folks. Our top stocks in the home building ETF were up 56% last year. Now, let's see how they're both performing this year. I'll give you a hint, pretty darn good. All right, let's look at the S&P 500, and we can see right where it bounced off its 20-day moving average down here, and then all of a sudden took off, and we're up at the top of the trading band. So we always have to be a little bit careful when we reach the top of that band. Is it going to keep going up? And it looks like these lines, the red lines, are starting to turn down a little bit, doesn't it? So we're making too much of a little thing. But we come down here and the intermediate term indicator has turned flat. Now, don't forget, we're in overbought territory. So that means, the path of least resistance might be down, even though we're sitting almost at new highs, except for Friday when the market backed off a little bit. We went to new highs. On Wednesday is where we closed, and then Thursday it backed off a tad, and Friday it backed off just a tiny bit. Well, because it's waiting for Wednesday and what happens with the Fed. So we're in a very precarious position right here, folks. And let us look at the candlesticks of the S&P, and we can see that the short-term indicator went up, and now we're overbought short-term. We are at new highs. Here's that line right in here. And then down here, let's zoom in on this, and we can see we have a slight bounce of this black line over the red line. And we want to be a little bit afraid of, if this market does turn down, we have this double top up here, and then we'll probably get a little bit of a correction in here. But again, we're sitting at new highs, and let's go back up here. We have this line going up, this line coming down. So we're starting to build a divergence here, and we don't care for that type of situation right here, folks. And if we had strong numbers for the jobs market on Friday, I'm recording this Saturday morning, so yesterday we had that strong jobs report. The market did not react to it. Well, initially it did. It went down, and then it came back to close pretty much flat for the day. So, but this has us worried. This could be a possible divergence. That again, up here with the market going to higher highs, this indicator, if it turns down at all, will give us a sell signal. So we're a little bit worried in here, folks. And when we look at the Dow Industrials, well, we definitely look like this wants to go higher. And so we had this little bottom in here, up here, and now we're still in the middle, which is kind of no man's land. We don't know which way we're going to go when we're sitting in here. and we are sitting right above the 50-day moving average, which is this blue line, right below the 20-day moving average, which is the green line. Oh my gosh, we're right in the middle. But we're starting to get oversold here, and it looks like this black line wants to turn around. So we're getting divergent signals from the Dow versus the S&P 500. And let's go to the QQQs. Well, we have the same situation with the QQQs. We're overbought in here, and we're sitting at new highs. But when we come down here, if this indicator turns down, we have a bearish signal in there. So, boy, it all depends on the Fed this week. And don't forget, Monday, NVIDIA splits, and so we'll get a lot of action in that stock, because as the stock splits, some people will take some money off the table, other people will start buying it. But usually when a stock splits, a good stock splits, it will eventually start to rise because more people have access to a less expensive stock, or what they consider a less expensive stock. So it's going to go both ways on Monday, folks. So it should be a wild, wild Monday. All right, portfolio protection. Well, we have protection, and this is about $140,000 portfolio. We have 3 SPY puts. Now remember, the SPYs represent the S&P 500, and they are 1/10 of the SPX. The SPX is the S&P 500. S&PY or SPY is 1/10 of the SPX. So for about $40,000, $45,000, each put represents that amount of money. So we're looking at $135,000, $140,000 portfolio, 3 puts. Now these are about 10, 12% below the market, so therefore we call them disaster insurance. And some people don't like to have insurance right up to the market or right at the market, because it costs too much. So we can insure about 10 to 12% below the market. Very inexpensive this time of year because the market is so high. We just might roll these June puts over into September. Reason being is that the September puts are not expensive, and we'll see what happens on Monday and Tuesday, but we just might buy that put out to September. And notice that these puts, the June and July puts, are at 425. The August puts are at 440. So as the market rises, we bring our put protection up, and we might want to see a 440 September put, because out here we expect some kind of decline in the market. Now this is just purely guessing, but we kind of expect maybe a little bit of a correction, then a rally during the summer. Then, of course, we come into September and October, which is usually a weak period. But we have this thing called a presidential election coming up in November. So the market is just saying, okay, what do we do here? We're at a high. We're at new highs in the QQQs and the S&P 500. What do we do? Right here, this kind of protection is pretty neat, because let the market do what it does in the short term. You don't worry about the short-term moves. And yet, if the market does decide to put in a big correction in here, because who knows what the Fed is going to do, who knows what the market is going to do coming up to election. I mean, we've got everybody in court. We're families in court of the president and the former president in court. Oh my gosh, what a mess out there. So anything could happen. And we kind of like these puts, 10, 12% below the market, leave them there and forget about the short-term moves in the market, because it's all noise. And, something can happen one day that's really dramatic, and the next day everybody forgets about it. And that's what the stock market is all about, folks. It's a daily noise-making machine. So, folks, we had a crazy week, and the waters are a little rough because we don't know what's going to happen this coming week with Jay Powell. But don't forget, Canada and the European group, the European market, has lowered interest rates already. So that puts a little pressure on the Fed to lower interest rates. But with that jobs number on Friday coming out very strong, we doubt the Fed is going to move this time around on Wednesday. So we'll see. But who knows? we're always surprised in this market. Meanwhile, it's the weekend. Go out, enjoy yourself, go for a walk. This is a sunrise on the Atlantic Ocean. So, folks, just take it easy, be with your loved ones, and most of all, stay safe. And guess what? We'll be back right here with you on Monday. So have a great weekend.